I found something very serious that will affect you. In today's video, we're going to look at a few aspects of debt that have gone out of control. I've never seen anything like this before. So we're going to break that down into a couple things, and I want you to understand that we've reached the point of no return. You can't reverse this. You can't run the clock back on it because of how far we've come. Look at this. A situation with debt as it relates to real estate can be broken down into subcategories. We've got the average individual, they're taking out a mortgage. We've got the corporations where they've got their big towers. We've got the retail establishments. There are so many different types of real estate. And of course, each one of those has debt associated with it. Some of that is going to be long-term debt. So it might be, for instance, the average suburban home where you're going to pay that off over 30 years. And it's at a fixed rate of interest for that entire duration. But what about the corporations when they have a big skyscraper? Well, they have multiple tenants within that one building. That tenant might be some grade A blue chip type of company, or it might be another. They've got debt associated with each of these levels of these companies and all these businesses. And are they able to pay that back? Well, there's something to that. And we start to dig in a little bit more in depth, and it seems as though they don't have a chance in paying back. And if that's the case, if they can't pay that back, what does that mean for the financial system? Well, I'm going to show you today that we are encountering a time in which it seems likely that there's going to be some sort of event that results from the fact that interest rates are at these high levels. And the only way out of this is to print beyond belief. How does that sound? Well, we're going to break this down. And of course, we need to talk about how, under these circumstances, you can not only survive, but you can thrive and prosper. That's what we all want, right? Let me show you. First thing that I need to discuss here is related to the 30-year fixed mortgage rate. Of course, in the United States, this is up over 7%. You have Manhattan's median rent remaining at a record high of $4,400 a month. The prices on mortgages are up. You look at the rents are up. This is for most major cities around the world, all experiencing this at the exact same time. You see the mortgage applications, obviously they're down because of these factors. And it doesn't help people that they, can choose to rent right now because the rents are extremely expensive. You have the monthly mortgage payment going up, doubling on average. I mean, just think about this. The average payment somebody's going to make is double what it was a couple of years ago. I know when you go to the grocery store, when you pay your energy bills, everything, all the services used, everything seems to be up significantly. Maybe not double in some cases, but in some cases, certainly that it actually is the case where you're paying twice as much as you did before. This leaves less disposable income. Remember, behind every expense, there is always going to be debt associated with this on the deeper level. Where does all of this so-called money come from? It springs out of the bank's balance sheets, created out of nothing like a mushroom. And that then, of course, has basically this idea that we can create something out of nothing and then somebody else is going to pay that back. It is completely wild and ridiculous, and I struggle with the concept myself of something out of nothing that needs to be paid back. And how do you pay that back? Well, it comes out of nothing. It's this inevitable cycle that we run into here that obviously has problems over a longer period of time. Redfin reports home purchases fell through at the highest rate in nearly a year. Of course, you can see this right now coming at a time in which people cannot afford the payments, so of course. But we are only getting started. This is the debt circumstance that so many companies are dealing with, so many individuals are dealing with. It goes a level deeper. I want you to know that households and the corporations have basically got into these dangerous territories and they can't get back from it. We can't climb out of it. You can guess, if you're interested, which company is affected by massive defaults right now. Big company dealing with some big defaults. Can you guess? We'll talk about that in a second. And is Canada the biggest bubble of all time? Well, we'll look at that as well. You got to understand that there's so many different elements to this. And when we talk about real estate, we are just really looking at one piece of a very big puzzle. Well, you're a truth seeker. That's why you're here. You want to know what this is all about. So let's look. 90% of companies say that they'll return to the office by the end of 2024, but 5-day commute is dead. And that's largely for a lot of companies. Yes, they're going to have to come back. I don't know about this end of 2024. A lot of businesses have already said, you're coming back to the office, come back right now. And if not, you're fired. And so a lot of people did that. Some are fighting it. We'll see what happens over time. It depends on the industry, of course. But the whole, people traveling from, let's say, the suburbs into the downtown core 5 days a week, that's likely not going to happen. There's this back and forth. There's a lot of leniency. Oh, I need to go to the doctor's office today, so I'll work from home. These things have become more typical where there's a lot of leniency to work from home at this time. What does that mean? Less commercial real estate is needed, period. End of story. Less commercial real estate. But you've got a lot of commercial real estate. You've got a lot of retail. You got a lot of office. And I think it's important right now to understand that there's a lot of debt associated. Hang on. So what did you guess for the companies exposed to defaults? Well, let me show you. Blackstone and Brookfield are on the top of that list. Yes, they have not been able to pay back their debt on some of their properties. Simple matter of fact, where are the locations? Manhattan, in one case here, Finland, Las Vegas, Los Angeles, and you go down the list, okay? So many different cities, but here we have just a few examples, and it goes all over the place, but office is the one that is just terrible. It is in such dire straits. Office buildings are not needed in the way that they did before. Retail is going to have its own crisis. There's no question about that, and already is in some cases. But we've got different aspects to this. You've got the banks dealing with it, but you've also got the commercial mortgage-backed securities. Remember back during the financial crisis, housing crisis, we were hearing about these asset-backed securities, toxic assets. They threw these names around there. And so the Federal Reserve said the solution to this crisis is, number one, we're going to take Fannie Mae and Freddie Mac. We're going to take them onto the backs of the taxpayers. We'll handle that. But also, we're going to buy the mortgage-backed securities, which were called at the time toxic assets. We'll buy these things, and that will stabilize the market because we're the lender of last resort. We're going to buy that all up. And so they kept doing it year after year after year. And at that time, that was seen as the temporary solution. Now we know it's just permanent forever. So we have this issue with commercial mortgage-backed securities, which is essentially the same type of thing. It's a derivative of the debt associated with these properties. And so what happens when you have tenant after tenant after tenant, either completely, not being able to pay their bills, they're basically going bankrupt, who knows what the circumstances, but one after the other can't deal with it. Okay, then you have a crisis. And then that starts to unfold and you have problems at the lender. But who's lending that money? I'm going to show you. Can you guess? Is it the big banks or is it the regional banks? Uh-oh. Can you hear SVB ringing a bell? Check this out. Banks hold approximately 40% of $4.5 trillion of outstanding commercial and multifamily mortgages in the US. Office accounts for approximately 20% of the 4.5 trillion. Okay? I think multifamily, I'm not saying it doesn't have problems. Of course, they can't pay their debt. They got an issue. But in general, multifamily will fare better, most likely, than office and retail. That's what I would say, and I'd stick to that. For the office segment, within US banks, regional and local banks account for 62% of lending, while national banks comprise the remaining 38%. So, what does that mean? It means the regional banks, the smaller banks, are the ones doing the most lending to office. And so, we had a problem, remember, with these regional banks back in March of 2023. You had one after the other, but also big banks too. Look at Credit Suisse dealing with their own issues. This is all because of the rise in interest rates throwing off their whole mess when they thought inflation would be transitory. So that's what we're dealing with right now. This is a crisis, and unless something changes, this is inevitable. But you can see that commercial real estate debt maturities, you've got $2.5 trillion maturing in the next 5 years. The way it works, of course, as I talked about at the beginning, you've got 30-year debt on your average real estate in the suburbs. Okay, that guy is paying his bill, he's going to pay it over 30 years. But in the commercial real estate side, it's shorter term. Okay, and then that has to be, then it matures, you've got to then repay that, okay, or refinance that. And so this is how it works. In fact, in Australia, it works the same. In Canada, it works in different places. In the US, the residential, you could stretch that out for 30 years at one interest rate. It works very well. US has a very big advantage in that case. And so with this here, you understand when it comes due, it's coming due at a much higher level of interest. That puts even a further burden on this. So in that next year, I believe I have it right here. Yes, you could see that there is a $1.1 trillion of debt maturing in 2023 and 2024. So there's a lot coming due right now as we speak into next year. Trillions of dollars worth here, connected in at a higher interest rate. Simple matter of fact. So the problem as we move into next year gets much worse. Much worse. Office comprises 23% of debt maturities in 2023 and 2024. Okay, so we know that there are trillions of dollars here. We've got a big concern that we're dealing with, and that the math is looking real bad. Real bad. All right. Canada likely sitting on the largest housing bubble of all time. Incredible. I've said this before, and I do agree with it, but here we go. I wouldn't necessarily say that it's imminent. I would say it's pretty inevitable, okay? What do we have in Canada? Just the debt to income ratio is just way too far. It's gone way too far. House prices to relative income argues that those looking for a big headline about a housing bubble should be keeping an eye on the disparity between house prices and incomes. This is what I talked about in my book, which I published back in 2012. The problem has become, I would say, at least 5 times worse since then. All right, we've gone over a decade, and had we had a chance back in 2012, we had a chance to restore order, to bring things back into a circumstance where people wouldn't have been hurt. But now today at these prices, it's going to slaughter people. It's going to be devastating. And the problem here is not that if house prices collapse by 50%, people are not going to get hurt by that. Yeah, they'll be underwater. I get it. But you keep going, and eventually you'll be okay as long as your income is coming in. Okay, it depends why the house price crashed. It's the inflation. Oh, we've got a big problem. Now we got to print money. Now we got to cut interest rates. And those prices will soar. It will be very devastating and damaging to everyone. That is the worst case scenario. Decades low interest rates seduced a lot of home buyers and has led to excessive leverage backing up the whole system. Yes, there's no question about it. And I just wanted to finish off with this. L. Arian warns of a massive corporate refinancing next year. Economist says high yield and commercial real estate is at risk of a refinancing shock. This is coming everywhere. Hope you see what I'm trying to get at in today's video. I want to highlight the fact that you just don't sit there and take it. You've got to survive, number one, but more importantly, as we look at this, you got to thrive and prosper. And that's what this channel is all about. You want the truth so that you can thrive and prosper. All right? First things first, reduce your leverage. Any way that you can reduce your leverage, do whatever you've got to do. I know some people that will take on, they've got too much credit card debt. So what they can do is they can get one of those balance transfers. They can get a credit card that for the next 18 months, they're not going to pay any debt on. Okay, so they've got 18 months to clear that up. Yes, they got to pay the transfer fees and all that, yes. But at least they're not going to pay 22% interest on their whole thing month after month after month. The balance transfer, they can do this. They can make this happen. They can do debt consolidation. They could actually talk to the, where they've got this creditors and get that to be wiped off potentially. There are circumstances, okay? Reduce your leverage any way you can. At the same time, when you talk about buying what you can manage, sell what you don't need, okay? And that's what it's all about. When you look at this in terms of assets, when you look at just the things that you have, right now is that time where you will accumulate what you can, because maybe you think that the prices will go higher as a result. But at the same time, if you have things around that you just don't need, sell. I know a lot of people did make the smart decision back in 2020 to sell their second vehicle because they said, look, I'm going to be working from home. My wife is working from home. I got the kids doing the so-called school online at home. All right, you know what? I don't need that second car. So they sold the second car. That was a good thing at that time because they were able to then reduce their costs. Whatever it is, stuff around your house. You've got stuff that you can sell that might make hundreds or thousands of dollars. Please think about that, okay? It's important. Okay, at the same time, big companies can be hit. They can take damage, or they can go bankrupt. And that's why we need to diversify. This goes for investments, your stock investments, but it also happens to be related to, just about anything, the companies that you're working for. Don't think they're bulletproof. That's what I'm saying. So you got to diversify where you can. I wanted to highlight the fact that everybody on Discord now has access to Compass. So check out Compass. Let me know what you think. Okay, I've got very little feedback so far, even though, there's a couple hundred people that have gone into Compass. I want to know what you think, okay? So you can get in there right now simply by going onto Discord. The link is in the description. Get over to the announcements section. Go to the link. Let me know what you think. What is about the comment of the day? Come on, everybody. Fear the Honey Badger said this. I like that a massive spending bill, depending on money printing, is called the Inflation Reduction Bill. That's right. Inflation Reduction Act. And they're spending a lot of money. Yes, of course, that's how they do this. They want you to think that they're actually taking care of things for you, when in fact, we know they're never going to. You got to take care of things for yourself. First, we find out the truth, and then we can thrive and prosper. I hope you appreciated this. Hit that thumbs up button. When you do that, it helps out the channel. So I want to thank you for this. If you have questions, you let me know directly. You can always contact me on Discord. I'm always available for you. I'll see you on the next one. Take care.